The South African economy is officially in recession. In the lead up to the revelation by Stats SA today, many analysts were hoping against hope that in fact we would not arrive at this point. But with the benefit of hindsight, perhaps all the indicators showed us it was inevitable. Stats SA data showed that gross domestic product declined by 0.7% in the second quarter. This follows an even deeper contraction of 2.6% in the first quarter. Technically, when there are two consecutive quarters of economic decline, this is described as a recession. To talk about what's got us here and where to next, I'm joined on the line by Maarten Ackerman. He's Chief Economist at Citadel. Maarten, break it down for us. Which were the key sectors that dragged economic growth down?
I think the biggest detractor is basically agriculture. Now, we've warned last year that agriculture, the tailwind we've seen during 2017 can't continue in 2018. So maybe just go back a little bit. So we've had a very, very tough drought in 2016. And then last year, the drought basically over. We've had the best crop season on record in South Africa. So we've seen agriculture growing north of 30% quarter by quarter. So very, very high base effect coming into play. In the year 2017, more than 17% growth in that one sector only. So the big decline in the first quarter of this year, 33%. And again, this quarter, down almost 50%. That's probably the biggest detractor from GDP growth. So if we exclude that, then not a great number, but, we would probably then flat for the quarter in terms of economic growth. So that was the biggest detractor, and then a couple of other industries as well. We do expect that will fade going forward in the rest of this year, again coming off a low base.
It's very concerning to see that manufacturing was also somewhat of a laggard.
Yes, manufacturing obviously is much bigger than agriculture. It's about 13% of the economy, and that ended marginally down. That is really the part of the economy that we need to get going, because that's where we'll create jobs, where we can actually increase tax revenue and start to address a lot of the structural issues. That aside, we don't need we need to focus on the positives as well. And mining was up almost 5% for the quarter, and construction, electricity, and finance very close to 2%. So if we can really address some of the detractors, then there is about a 2% growth still in some of the other sectors. And that's the kind of numbers that we are looking for the overall economy to actually just outpace the growth in population. And if we can get to that point, we can really start to move forward.
I was quite surprised about construction because, the month in, month out, quarter on quarter, talks about construction has been quite negative.
Yeah, I think, there is a concern about construction and overall investment in the economy. And, we're still waiting for more clarity on the land issue and also on the mining issue. So I do think until we do have that clarity from a policy point of view, the economy is going to remain under severe pressure and probably keep on growing below capacity. And this increase the risks that rating agencies will probably think about downgrading us towards the end of this year. They did say that the biggest thing that we need to get right now is to generate growth, get a rebound in economic growth. And unfortunately, today, it doesn't seem like that's coming through strong enough.
Yeah. So with us now technically in recession, just break it down for the layman. What does it mean about the here and now in terms of job security, consumers' ability to afford life? That's in an environment of high inflation, not to mention the rand shooting through 15 against the dollar earlier today. Just give us the nuts and bolts. What does it mean?
So I think maybe the market is overreacting just because officially in a technical recession, which means that we have two consecutive negative quarters. But like I said, the economy has been weak since 2013 already. Since 2013, we didn't get it right to grow more than 2%. So in my mind, if you grow below the population, everyone is getting poorer day by day, and you can't address the issues that we are facing. That aside, where we are right now with the rand at these kind of levels, inflation is going to trend towards the upside, which implies that the Reserve Bank is probably going to need to consider an interest rate hike rather than a cut, which feels counterintuitive, but the reality is that, they need to keep inflation within the targets. So unfortunately for the consumer, on budget today's numbers, consumer spending or household expenditure declined 1.3% for the quarter. And that is really a reflection of the difficult environment we operate in at the moment. So you can add, there's a lot of headwinds. It's definitely a significant increase in the petrol price. which is likely to continue at these kind of levels we've seen from the rand. We've seen the VAT increase. We are seeing sticky unemployment, generally higher taxes in the February budget. So the consumer are facing quite severe challenges at this point. And it is a concern because we are a consumer-based economy. So normally 66% plus of economic growth is driven by the consumer. So if we can't get into an environment where the consumer is feeling slightly better and can spend a little bit more, that implies that, economic growth is going to remain under pressure.
Yeah. One of the key factors ratings agencies have highlighted about the South African economy is the need for it to grow. And obviously now we're in contraction territory. What does that then do in terms of their perception? And what do you expect they'll do at, the next time that they're reviewing the country?
I think all eyes will now be on the medium-term budget next month in October. So in February, we've used an assumption of about 1.5% growth. I think that's definitely not achievable anymore. So growth needs to be revised down probably to 0.8 or even lower. And if you do that, that's got a direct impact on your tax revenue and obviously your budget deficit and your debt to GDP. So I think the rating agencies will watch the budget very keenly. And the reason why we'll probably wait is to say, well, you know what, the first 2 quarters, we can't really blame the current government. It is legacy that's spilling over. It is 10 years of mismanagement of the economy. And there are some positive changes taking place as we speak. President Ramaphosa is attracting foreign capital. They're in China at the moment. They are doing the right policy moves in terms of fixing the state-owned enterprises. But that will take years to actually get to the result we're looking for and before we can actually see it in the numbers. So it might be that, we're just lucky that they say, well, let's focus on the changes that's taken place. But like I said, we need clarity on the land issue, and we definitely also need clarity on the mining to really unlock a lot of capital that's waiting to be released, depending on the outcome of those two uncertainties.
And just very quickly, Maarten, just explain to the listeners who often ask the question, why should we care what the ratings agencies think? Just give us a reminder of why their voice is important.
Okay, their voice is important because they're almost like the canary in the coal mine, warning global investors to say, well, be careful to actually borrow more money to the South African government because if this continues, they won't be able to pay. So then it implies that if we do get downgraded, the cost of doing business or the cost for us to borrow money to keep the economy going, whether that is for social grants or supporting Eskom, that cost will go up, which implies that your interest payment as part of the budget grows too much. And that's money that you could spend on like social support rather than just paying interest. And also in that kind of environment, the foreigners decide that it's too risky and they're looking for other markets rather than South Africa, and there's further capital outflow. That's just more pressure on the currency. And pressure on the currency implies potentially higher inflation, which is already not good for consumers, and then even higher or sticky interest rates at higher levels. So it's an environment where, the consumer, if we do get downgraded, will eventually see it because the cost of doing business or borrowing money or your home mortgage or just inflation going to the shop is likely to increase as a result of that.
Would it be dramatic to suggest that the South African economy is in intensive care and that we really do need some sort of medicine to jumpstart the economy? In other words, do we need that stimulus package that's been spoken of? And if we do, where will we get the injectors from?
Yeah, I think the stimulus package will do a lot to actually kickstart and focus on the right industries and pump some liquidity where we need it. The big question is where we'll get it from. If you think about the current budget, like I've said, it's already under severe strain, and there's a lot of other things that we need to do, like the national health insurance, free education, and then we had above inflation wage increases for the public sector. So the sourcing of the stimulus program out of current kind of resources is going to be a bit of a challenge. Maybe there might be some in it in terms of what's happening in China at the moment, or some other foreign direct investment that can come to our shores. But yes, 50 billion in the right areas right now will definitely help to target certain areas and to try and get us out of the intensive care, like you said, and probably get a bit of a rebound in economic growth in the second half of this year.
In the absence of short and sharp intervention, what are the long-term things that we need to be dealing with as South Africa Inc.?
The long-term issues unfortunately, is a structural issue. So that's right from, poor education, sticky or structural unemployment, a low savings rate, very difficult business environment. The ease of doing business is not that much, is not great. So all of those things we can address through the right policy, and I've mentioned already that government is moving towards that. But policy take a number of years to actually show up in the real numbers. So it's almost being patient, trying to keep the spirits not too depressed, and say that, as long as we stay on this course, we will see the numbers eventually. We need to remember that it took 10 years, and especially the last 5 years, of corruption and mismanagement to actually get us to this point. The last recession was in 2009, which was basically on the back of a global issue more than a local issue. So to fix those structural issues, we won't do it overnight. And that's why, again, I say the year-to-date numbers is no reflection of the current administration. And if we continue on this path in terms of fixing the policy that we need to fix, we can still see good numbers going into 2019.
All right. On that optimistic note, we'll leave it there. Thanks very much, Maarten. That was Maarten Ackerman, Chief Economist at Citadel.